The fiat Federal Reserve note continues illustrating relative strength versus other competing full fiat currencies. Last time the fiat US dollar was this relatively strong was nearly 2 full decades ago, in the summer of 2002. Meanwhile, rising US mortgage rates have now put a damper on home sales, all the way to the lowest levels in over 22 years. And it's for good reason. People are being priced out of real estate in the United States. 2 years ago, the 30-year mortgage was 2.96%, and the median existing home price in the USA was $306,000. Today, the 30-year mortgage rate is 5.60, and the median existing home price is $404,000. With a 20% down payment, that's an 81% increase in monthly payments from $1,026 to $1,855 per month. If we're ever to get back towards 2011 levels on this chart, both silver and gold values will need to outperform real estate for years to come, if not throughout this entire decade. Here is bond trading billionaire and exponential by 2030 silver bullion bull, Scott Menard, explaining one of his biggest investing lessons in his life.
On Wall Street, you're only as good as your last trade. So what happens when you make a bad one? Scott Menard is in charge of guiding investment strategies for Guggenheim Partners, which oversees $325 billion. He also leads research on global macroeconomics. Here's his big money mistake.
One of the most difficult things I went through in my life was the period right out of college. I moved to Fort Lauderdale, Florida. I was working for Price Waterhouse, and it was 1980. And real estate prices had been skyrocketing in Florida. And so I wanted to get in on the real estate boom. And so I managed to scrape together everything I had, and I found this condominium that I could just get into, and I bought it. And of course I had a big payment.
How much were the interest rates?
At that time I got a special subsidized mortgage, which was 9 7/8%.
Ooh.
Right, and that was low because most rates were like 14 or 15 or 16. You know, I thought I was getting my foot in the door, but it didn't take me long until after I closed, which probably was a few weeks, when I started to have second thoughts.
Why?
Well, it just something in the pit of my stomach. But of course, this is a sure bet. So, just ignore it.
That was the prevailing wisdom at the time. Real estate, you can't go wrong.
Oh, especially then, because this is the heyday of inflation. It had been like the number one performing asset for at least 5 years. I learned a lesson that, not only was I stuck personally in a piece of real estate that wasn't worth what I'd paid for it, but that real estate was was a very volatile asset class, and that the old adage that real estate always goes up was, one of the great lies.
So tell me more about this apartment in Florida. What was the listing price?
I think it was $54,750. You remember this when you suffered through something.
That's very exact. And you said your monthly payment on the mortgage was?
It was about $600.
And your annual salary at the time was only?
$15,000.
Okay.
That was the mortgage and taxes. I started to feel like a captive, that I was a prisoner to the place. I couldn't, it wasn't like, if I decided I wanted to change jobs or move somewhere, I was tied down with this property.
So this is something that is recurring because housing markets go in cycles, and including at this moment when housing is doing very well.
Right.
How did you extricate yourself from this real estate investment in Florida? Like, does it end with a happy story?
No.
No.
It ends about almost 20 years later.
Well, you held on to it from 1980
Well, it's going to come back. Right, and I rented it, and...
Did you make money on renting it?
No. Right, because by the time I had the maintenance and the whole bit, and of course I had reached for the only thing I could afford, which probably around 2002, 2003, I finally sold it at a loss.
2002, 2003, this is after you retired, unretired, came back to work at Guggenheim, was leading the firm. That's when you sold the apartment at a loss?
Right, well, it's going to come back.
Wow.
By the way, what's really funny is when I sold it, I was like, look, I could see the dynamic that was starting to develop in real estate. And I'm like, this thing's going to take off again. And it did.
So you sold it right before it took off? Or?
Yeah. But the thing is, I was just so disgusted with dealing with it. And somebody approached me and wanted to buy it. And I'm like, I just want out.
Did you make a phone call to anyone about this? I mean, did you tell anyone about this experience, or were you?
No, I was hiding.
You were hiding?
Well, I was embarrassed. You know, my family saw me do this. Everybody saw me do this, and I'd actually gone to my grandparents to get some of the down payment. And when I got the proceeds from the sale, and I had positive cash, I sent it to my grandmother. And I said, I'm paying you back the money I borrowed for the condominium. And I couldn't convince her that I'd lost money.
Really?
Oh, it had been so long, and
she was like, "You clearly made out better."
Oh yeah, you're such a smart investor, and the whole bit. I'm like, but I was like really begging her to believe me. She never believed me. So,
is this something you think you could have learned from a textbook or from someone telling you, or did you have to experience it firsthand yourself to really understand that real estate can go south?
I think, it taught me a lot about the usefulness of history. Because Florida, South Florida in particular, is notorious for real estate booms and busts going back to the 20s. And so, it probably affected the way I looked at all investments going forward, which was not to just listen to the conventional wisdom of what everybody else was saying, but to take what they were saying and, actually, really in reality challenge it.
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible Bullion giveaways like this one.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of Silver Eagles.
So click the link below for your chance to win.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part. In the face of fiat US dollar strength this week, both silver and gold traded downwards. The spot silver price closed just above $19 an ounce, while the spot gold price finished this week just over $17.50 an ounce. Gold-silver ratio ballooned back up into the 90s to close this week. For a longer context on where the gold-silver ratio stands at the moment, I would suggest reading the following. While gold and silver have a strong positive correlation, the ratio of their prices has ranged wildly, from 1 ounce of gold buying as few as 30 ounces of silver in 2011 to as many as 120 ounces of silver in 2020. In the early stages of the pandemic, silver snapped back, jumping from 120 ounces of silver per ounce of gold to as few as 65. However, in recent months, the ratio has begun to slide again. Currently, 1 ounce of gold buys over 90 ounces of silver. Of course, this gets a little more complex when you're talking about physical bullion, given the various premiums that are being charged on silver bullion versus gold. But the idea is there that the gold-silver ratio at 90 is rather high, and so anyone who's looking for an aggressive purchase for value would look for silver bullion at the moment, anything with low premiums. Silver bullion import figures out of India keep growing in size. I had to do a double take this week as I read the claim that just over 263 million ounces of silver bullion will make their way into the world's biggest silver-consuming nation. Of course, we still have 1/3 of the year remaining, so we'll have to see if this massive figure ends up being at all accurate by Q1 2023. For now, bullion buyers who have relatively strong fiat US dollars to spend, you should do so now, while those US dollars are exhibiting strength and keeping spot prices at reasonable levels. That's all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.